Is the Bitcoin correction over? We've seen the deepest retrace in this cycle. Just comparing to all the retraces in this cycle, this is definitely the deepest one, and we've seen a fantastic recovery. So we'll be talking about whether this is the end of that correction or just a relief rally. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So we've been talking about this retrace for a while. In the previous video, we spoke about how this was the deepest retrace and at the same time, one of the longest retracements as well. So looking back across all of these retraces, across 20%, anything lower than 20% is a bargain buying opportunity. And the longer these retraces go on for, the better the opportunity as well. We've seen retraces of 2 weeks to 3 weeks long, but if we get to the longer end of those retraces, we can have a retrace of up to 2 months. So this became a 50-day retrace, and also one of the longest ones, but also one of the deepest ones. So we've seen a recovery since the previous video, and it's very interesting how things are shaping up in terms of the post-halving danger zone. This is a tweet that I posted a few days ago, early this month, how Bitcoin was downside deviating by 6% towards the downside below the range, low of the reaccumulation range. And in 2016, we saw 17% downside wicking below the range, reaccumulation range low. And typically we tend to see downside deviation in these reaccumulation periods. And the beautiful thing about this is that, of course, 2016 history repeated, not only with that downside wick, but we've come to protect this range as well. So any downside deviation below the range low is bargain buying opportunities and territory. So the fact that we've come to protect this range is phenomenal. That's exactly what needs to happen for this reaccumulation phase to continue going forward. So we've seen the pre-halving danger zone take place, where we've seen the pre-halving retrace begin. That's taken place. We've seen the last pre-halving retrace occur as well, maybe even overextend into the post-halving period and into that downside deviation. The post-halving danger zone is now slowly ending. It has 1 week left, but we've achieved what we were supposed to achieve in this post-halving danger zone, and that's that downside volatility below the reaccumulation range to get back into this range. So we've set things up really nicely for that post-halving reaccumulation to continue. So we're transitioning slowly away from that post-halving danger zone, which has a week left, into that post-halving reaccumulation period, which lays ahead. So that reaccumulation range is very much set up. And just going back to what I posted in early May, that we have a cluster of support in this green region where we could have seen downside deviation or a breakdown. And in the end, we saw a downside wick here. So that was that scenario, overextension towards the downside. So you're seeing that across different types of analysis, we are coming up with the same conclusion, where downside deviation beyond a demand area can occur for bargain buying. But as long as this holds, and it is holding quite nicely now to facilitate that reaccumulation range, then it's all well and good. It's in line with the structure. And I also spoke about this on the monthly time frame, because if you focus on the monthly time frame, this major area of old resistance, which essentially preceded an entire bear market for Bitcoin, this has been reclaimed as a support really nicely. So across this entire period of really just dating back to November 2021, it's been 3 years, almost 2.5 years really. But you can see how the psychology has changed, where people loved to sell here and people now are loving to buy, and prices following the black pathway quite nicely from what I mentioned earlier this month. We're retesting an old major resistance into a new major support. And that's fantastic, because where we are in the cycle right now, it's very clear we're around the halving event. And around a halving event, we tend to see downside volatility. We tend to see a lot of sideways movement. And 2016 showed us that downside volatility can be quite severe. but sideways price action tends to develop after that downside volatility. Really important to just focus on the fact that parabolic upside is on the cards and it will occur in the coming months ahead. So really important not to get distracted by this downside. This downside exists to set up this period of sideways movement, to set up this curl up in price action to start taking off into that parabolic rally that is months away still. Really important to understand that this is a reaccumulation range that is going to facilitate the next parabolic rally, and this is the reaccumulation range to really be focusing on. Even if you focus on these downside deviations below the range low, we've seen these downside deviations occur in this cycle many times. Those downside wicks can be quite short or long, but they tend to be quite long, and you can see that those long downside wicks tend to end the retrace as well. And you can see that on the deepest pullbacks, whether it's 23.5%, whether it's 22% with that downside wick. Here also downside wick to end the 22% correction, downside wick to end the 20% correction, and a very long downside wick to end that 23% correction in early 2023. We tend to see those long downside wicks form at deep retracement periods before flicking back up. So the correction is probably over, because as long as this range low continues to hold as a support, then we're not going to see lower prices. Of course, you could still see downside volatility below here. And could that downside volatility get us even lower than the downside wick we've already seen? Maybe, who knows? But generally, it's all about holding this range low. And as long as solidified candle closes occur above this range low and just downside wicking below this range low occur, then that's fine, because the market structure of this reaccumulation range, this sideways range, remains intact. So at the moment, it looks like Bitcoin is still between the 70k range high and the 60k range low, with some downside wicking occurring, but just notice how upside wicks also occur beyond the range high, and this is true across the cycle as well. Downside wicks tend to occur across the cycle, whether it's to the upside of a range or whether it's to the downside of a range. But really important to note that these are extremes in price action, and they are moments of fake outs, whether it's a fake breakout or a fake breakdown. But generally, the market structure is a reaccumulation range. It is moving sideways. The market structure is still intact, and as long as this range low continues to hold in a solidified way, the correction is over. But now it's all about consolidation for the next few weeks, because this reaccumulation phase can last up to 150 days, something I spoke about in the previous video. So if you haven't checked that one out, feel free to do so. That's about it for today's video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.